All right, hello everyone. So let's do a recap, right? Normally I don't do a lot of videos with what's going on in the members area because I'm always posting the time, the days, the swing hours, plus a video, okay? But because we're in the challenge, it's best to do a few videos every now and then more frequently so that we can actually learn from, what happened. And you guys should be the most prepared people for the market in the world. Why? Because you guys are getting time, right? Now, as you know, in the beginning of the week, for every week until in fact the end of February, as you can see, I've already posted all the swing days and the swing hours. So we know everything until the end of February, when the market's going to do a swing day and so on. And as we get closer and closer, we can price it out as well with the technical analysis. Now, yesterday was Monday. We had the swing days. We've got the swing days for the whole week until the end of February, and the swing days. So yesterday, euro dollar, we had a euro dollar trade, right? And what was that all about? So let's take a look. Now yesterday it was a swing day, so this was the place where I actually entered that trade. You can see here, okay? This is the zone. The market went down a little bit. The stop loss was just above here, okay? And then when New York opened, and remember New York was closed yesterday, this is why you need to put a stop loss every time you enter a trade. The stop loss was in there, everything was good, and then everything was going well as well, and then all of a sudden the market just shot up all the way there, okay? And I got stopped out. But it's not a problem, because just think about it. How tight is that stop loss? Okay, just think about it. We entered the market here. Well, I entered the market there, right? The stop loss is just above there because this was the PST level, remember? If it goes above the PST level on a trading hour, you don't want to be in there anyway. Okay, so the market comes down nice and easy, and then it stops me out. Fair enough, no hard feelings. The market does that. Today was also a nice day to follow that through. Why? Because as you know, in the coaching program, we've learned how to get in to a follow-up on an impulse. And this is exactly where we were. Now, if you take a look at this, let's just do this, okay? This is a pullback at trading hours here. You can see the trading hours I've posted, all right? So here, this is also something I posted in the members area, all right? So from here, what happened? The market went up. Whoops, let's do this. From there, the market went up nice and easy, and all we had to do was just follow through. Now this is already covered, okay, and we should have room to go all the way up here. As you can see, I'm in fact going to follow that into a target on the daily with a PST level. All right, so no need to rush it. The trade is already covered, and if the market is going to go up after the impulse, why get out? Leave it in there for a few days, because I've already covered the position, managed the trade. As you can see, the stop loss is even above the entry, and half of the position is already closed with a profit. So we don't need to rush this in, because if it goes all the way, it's going to give me 1 to 12 risk to return ratio, okay? And this is how time and price can really help us out, because if we're wrong, the stop loss is really tight, and if we're right, that thing can go for a long time. Even the first place I managed the trade was able to get me 1 to 1.5, just covering the trade, 1 to 1.5. More often than not, even more than that, you can do 1.2, 1 to 2, 1 to 2.5, and so on, just on that first target. So following this forward is still okay. Just be mindful on the upcoming trading hours, because what you want to be doing, let's get back here, what you want to be doing is also not just managing the trade according to price like everybody else does, but according to time as well. So as the time goes on, you need to be looking out for, okay, when's the next session coming in? So we're in the 6:27:40 zone right now, okay? So I've got 6:42 on my clock, my time. So 6:20 to 7:40, this is going to be a time we're going to look out for. And I've said if the market breaks out, we've got target going all the way towards closing. So if this thing does continue it should go all the way into the closing. Now, this is amazing information, all right? Because if you know how far this has got potential to go, you don't have to be afraid. So here you are, simply just watching the trade, okay? Watching the trade go up from your level into the next trading hour. Okay, this is the next trading hour. So currently we're here. So, we should be getting into this zone. So this is no surprise. Okay, so going from one trade hour to the next one, pushing forward all the way higher, allows me to really squeeze and get the max profit with minimum risk. Okay, so this is the whole idea. If we also take a look at, okay, the SP500 example, which I think is also a nice one, was a bit more risky today on that one. However, though, the reason I entered that, I will tell you right now. If I can find it, just bear with me. Now, on this one as well, okay, why did I go into this one? Let's just see if we can narrow this down a little bit. Now look, if I can't move this up a little bit here, but you will see. Okay, let's do this. Now, if you recall, okay, once again, let me bring this in. Remember I said to you in the comments here, I said we might see sudden moves settling down into 525, 545. Now remember, I posted this on the 5th of January 2025. Okay, this is when I posted it, and then I could see that there was going to be sudden move happening on Tuesday. All right, so that's that. So knowing that in advance, knowing all of this in advance, is obviously a big advantage, right? And this is your morning. Let's see what's happening. You see this big fall. Now, what's the thing? What's the take on this big surprise fall? Well, for one thing, you can see that the market closed a gap that was here. All right. So that gap closed. Once the gap closed, the market did a stop sweep going straight up. Okay, leaving a gap here. Now, if you take a look at this, we've got a gap here in the morning, right? So I'm thinking to myself, there is a gap. Market did a stop sweep, filled in the gap. This is bullish, okay? Also, if you take a look at your weekly PST, which I did talk about, hopefully we can get it to work here, right? This is a pad, so it's a bit slow. On the weekly, remember, if you check the video, you'll see that the PST had broken out. So once that breakout happened, the market coming back, closing the gap, doing a stop sweep, and then settling down here at trade hours was a good opportunity for us to get in. Okay, and this is exactly what I did. I got in here. I actually covered the trade. Covered the trade. You can actually see, let me show you that might be better off. Let's do this. Let's get rid of that. Let's bring this in. Now in today's post, I also mentioned that too. All right, let's see where I put that in. That's the euro dollar. Here it is. Okay, I said London Open tight stop at trade hour, enough to cover risk and hold, and this was pursuant to my earlier post. Okay, so this was the picture there. Okay, this is one I also posted on social media afterwards, but you guys would have seen that. Okay, and also I talked about it here, all right, in the morning. So getting in there was not a bad idea, and from here, as you can see, the market just moved upwards. All right, so there was enough to cover the trade and then take profit as well up here. All right, so it all went nice and sweet. I did say New York is going to be messy, and I said if you don't want to be in the mess, stay until after 6:50. right? Why? Because 650 was dangerous, and we are at 650 now. Okay, you see how the market moved here with a sudden move, right? So seeing these things before they happen, obviously for us, is good preparation, because nobody knows what's going to happen, when it's going to happen, right? So if I'm already aware of what's going on, then I can be in the game. So both of these trades went really well. On both of them, on the euro dollar, like I said, I still have an open position on that. I do want to follow that through. If it does go according to what I think, following the impulse wave, we can follow it to the next swing day, and until the next swing day, that can really pump up your account and give you a nice big chunk buffer zone. All right, I hope these two examples helped. Also, yesterday's stop loss as well. You can appreciate that a small loss is just irrelevant next to risk returns such as 1 to 4, 1 to 5 in intraday trading, and even 1 to 12 overnight trading, and so on. So the more we get used to this price and time with our technical analysis and timing, the more it just becomes stabilized. The important thing here is just plan the trade the plan. Okay, so hope that helped. Have a good day.